Well, the markets have come within a handful of points of the record closes already today with encouraging consumer price index reports. Consumer sentiment numbers weren't great, though. We should point that out. Many are saying that the fundamental strength needed for this run to continue are with us right now, but are inflation concerns being ignored? Joining us today are market mavens. Darren Richards is Chief Investment Officer with AKT Wealth Management in Portland, Oregon. And from Houston today, David Dahl is President and CEO of Canale Trust Company. Good to see you both. Welcome back.
Thanks, Bill.
David,
Thanks,
how about that inflation report, huh?
Well, it's certainly driving the markets here this morning. Following up on yesterday's PPI number, I think the bulls have it right that inflation is tame. We see a Federal Reserve now that really has done a masterful job, I think, by the opinion of most. And it was our view at the beginning of the year that they were going to be off the table, and we don't see any reason to necessarily change that at this point.
Darren, what do you think? Could anything scare this market right now, the stock market I'm talking about? You have higher energy prices, you've had higher interest rates in the scheme of things, but none of that seems to be bothering stocks right now.
It's pretty surprising. We had the 10-year bond yield go up about 60 basis points in 6 weeks. And over that same period of time, the S&P went up about 3%. So not what I would have predicted if you would have told me that in retrospect. But the market has so much upward momentum right now that when I'm looking at possible bumps in the road, oil prices, yeah, I think the home market probably is the biggest one. But I don't think I see anything right now that would really derail this market substantially.
What about you, David? Is there any kryptonite that could affect this super market, if you will?
Well, Bill, I think Darren's got it exactly right. When you watch the 10-year, as it's moved up around 520 or so, we're taking a specific look at the 90-day T-bill. The separation between those two is eye-popping. I think the 90-day T-bill sits around 460. I even saw a 458 handle this morning on it. That type of separation from where Fed funds are at 5.25, I don't know if it's kryptonite, but it tells us that the Fed is pretty much not in a position that they're going to be raising rates anytime soon. Let's take a look at the GDP revision coming out in a couple weeks and what that says to exports.
All right, yet another thing to watch for down the road. So what are you gentlemen buying right now? Darren, you first.
We still like large cap stocks, and we're actually putting on a little bit of a growth bias versus value bias. When you look at the sectors that have the most upside potential, technology, telecom, healthcare, primarily growth sectors. So that's a direction we're tilting our portfolios at this moment, Bill.
Okay, technology, telecom, and healthcare. What about you, David?
Well, I like some of that. Technology, certainly with a product build-out. We've continued for a couple of years now and are still adding to our international exposure. I'd also maybe add some of the consumer discretionary sector, especially at the high end of that touch point.
Nobody likes energy, David?
Absolutely. Absolutely. Energy, I've said many times on this program about being close to the wellhead. We think oil is pretty stable in between $50 and $70 a barrel, and that bodes well for companies that are finding it and bringing it to market.
Darren, you're a little further away from the wellhead. What about energy right now?
Well, you know, we don't have an overweight toward energy, but it's been a great performing sector. It's up basically 15% year to date. So I think it's certainly a good way for investors to hedge some of the high oil prices by actually having some exposure to that sector. So don't have an overweight, but I think it's definitely got some potential for some upward movement.
All right. Very good. Good to see you both. Thank you for joining us. Have a good weekend.
Thank you.
Yeah, you too.